good morning, good evening, good afternoon, and welcome to Lucid Earnings. Coming up very, very shortly, we have the Lucid Earnings. I can tell you now, they have beaten on earnings, but with a surprise drop of 10%. I expected that. The stock is overly hyped and promoted, and we've got so much unknown knowledge around the stock, but this has played perfectly into my hands this morning, this afternoon, this evening, wherever you are around the world. The stock price dropped 10%, and I bought some shares of Lucid, so I'm very, very happy. Let's see how it plays out. We've got 39 minutes before the earnings begin. This could be a very, very interesting night for Lucid. So they have beaten on earnings. They're still not making any money. However, they have beaten on earnings quite considerably. So this is interesting. Let me bring it, let me come around to you right now and come on the screen. Welcome everybody. We've got just 38 minutes to go. That's an interesting punt. Good luck, says George Semaine. I think it's very, very interesting, the fact they've beaten on earnings. We did not expect them to beat on earnings. I said I can't see how they can because they're losing money, but they have quite considerably. So let's have a look at it right now. Here we are, 908. I've just bought a position in Lucid when it went down there, so I'm very, very happy with that. Let's scroll down and share with you the situation. This is what they've done. Look, they beat earnings quite considerably. Still not making money, however, but nevertheless, that is a big beat. It's all about expectations, though, where we're going to go from here. That's really what it's all about. So if I change to my brokerage account, you will see I just bought some shares of Lucid. I said it's been overhyped and promoted. Look, there it is. Look, there's my purchase. I'm down $2 at the moment. That is all. And if it pops up to 11 or 12, I will sell it tomorrow. I won't sell it today, but I might sell it today. It's okay if I do, but I'd rather keep it to the morning and see where it goes. But I like it down there. That suits me. Let's see what happens in 37 minutes. Welcome to the show. Welcome to Lucid Earnings. And there we go. There's my position. And I quite like it. Did not expect to beat earnings at all, but I can't see it going down another 10%. That would surprise me if it did. But even if it did, I would buy it anyway because it beat earnings. If it can beat earnings, as far as I'm concerned, that is good news for me. So anyway, earnings coming up in just over half an hour. This is the chart. You can see it dropped right off there. And it's all about expectations. So welcome to Lucid Earnings. We're getting ready for it. I'll see you back in just a few minutes time. If it's your very first time here, please do click subscribe and ring the bell. That would be very, very helpful. Thank you very much indeed. And we'll see you back in just a few minutes time. Don't go far away. It's going to be a very, very interesting night. See you back in a bit. Hi George, you just sent me some information on the screen and you've put down here electrical vehicle maker Lucid on Wednesday reported fourth quarter revenue that fell short of expectations. Well, all I can say to you is here that we haven't got the figures yet, but look at the facts on the screen. There you can see quite clearly, they've beaten on earnings on the screen. You can see it here. In fact, estimated 0.4 a share loss. There it is, and it's actually 0.28. So I'm not sure what you mean there. They're estimated at losing 0.48 per share, and it was actually 0.28. So they beat earnings. They exceeded their expectations. So I'm not sure what it is you are saying on the screen there. That's not what I'm reading on my screen clearly here. But I'd like to know more about it. But that's what the earnings is all about. However, when it dropped that much, I was happy to buy it. That makes sense for me. Anyway, I'll be back to you in just a few minutes' time. Don't go away. We'll be back in just a few minutes' time. In the meantime, here's some soft piano music for you. Welcome to Lucid. Earnings coming up very shortly. They have beaten on earnings and it dropped 10%. So I picked some up with the very intention of selling it out again. But we shall see how it goes. If I can make a quick profit, I will. And there we go. Lucid earnings coming up very shortly. Put your comments on the screen, excuse me, and I will share them for all to see. Thank you very much. See you back in a few minutes. Good morning, good afternoon, good evening. If you've just tuned in, welcome to Martyn Lucas Investor for the Lucid earnings. They have beaten earnings. However, the stock price dropped 9.5%. So all will be revealed shortly. I did jump in and buy $500 worth of Lucid with every intention of selling them again. It's a quick scalp trade. Let's see what happens. We shall have the Lucid earnings very, very shortly. Sit back and relax, give me your comments on the screen, and we'll be with you very, very shortly. Welcome everybody if you've just tuned in this afternoon for the Lucid earnings coming up in just 28 minutes time. For the Lucid earnings, and we can tell you now that the stock price has gone down 9.28. This stock is incredibly over manipulated. A lot of lies, a lot of deception around this company. I revealed it. I get often sent information about incredible news that never comes to anything. We heard about the buyout on a gossip website. That wasn't true. I made 140% on my position. That wasn't true. And tonight I can tell you that Lucid has beaten on earnings. 0.40 was expected, and it's actually 0.28. So we're getting some false information tonight about it missing on earnings, and in fact, it's beaten on earnings. So the stock price has gone down, and I just jumped in and bought some. You can see I just bought a very small position that I intend to scalp trade, and I'm down just $3 on it, 0.69. I just bought it a few moments ago. Here, it just dropped slightly, but there you go. That's my position, waiting to see what happens with every intention of selling it in the morning. I don't like how this company is trading. It doesn't matter how good the stock is and how good the car is. It's about how the stock trades, and we get a lot of manipulation around this stock. Sadly, it's a great shame, but that's how it is, I'm afraid. But we are here to make money, and that's it. We never short a stock. I never short stocks. I just buy them when I see opportunity to make money. And the earnings starts in 26 minutes. So sit back and relax. Beto Silva has just come into the show. Lucid to the moon, says Beto Silva. How are you? George Semaine reported electric vehicle maker Lucid on Wednesday reported fourth quarter revenue that fell short of expectations. That news isn't correct. George, where did you find that information from? Because they've actually beaten on earnings, and so I'm not sure where that information comes from. Beto Silva said, I hope they don't buy it, says Beto Silva. Put that on the screen there. Who's who's on the screen without any clothes on? There we go. Anyway, coming up, CNBC. Incredible. So why would they say that? I have no idea. All I can tell you is they've beaten on earnings. You can see it on the screen. We're looking right at it. I have no idea why the stock price has gone down. Is it false information? Is it manipulation? I don't know. Eric B, I think that was a good buy, Martin. The market overreacted. You bought a 10% down to sell at 6% down. I like that move. I think it was the right thing to do. Anyway, George, your comments can't be shared on the screen. You can't share links. You can only share them through Discord. So you've posted a link, but the links don't get shown unless you are a moderator. So that's what Discord is for. So George, send them on Discord. Eric says, I think that was a good buy, Martin. The market overreacted. You bought a 10% down to sell at 6% down. I like that move. All right, there we go. So we'll see what happens. We'll see what happens. If it pops up and I can make 10%, I will. I'm more than happy. But knowing that they beat on earnings, knowing that I got a 10% discount on that, doesn't make any sense to me. So I immediately jumped on it. I am glad I did not bet on Lucid, but I know the market overreacts every time. So, yep, I've bought it. I am happy. We're just 24 minutes to go now before the bell goes, before the earnings begins. This is our earnings tonight for Lucid. You're in the right place. And there we go. You can see how the market reacted. This is the presentation. We have still got some 24 minutes to go, so nothing to report just yet. And there it is. Anyway, we shall see what happens. I might set a limit. I'm looking at this now, thinking I might set a limit order on it. But I like the fact they beat earnings. They beat earnings. That's all I care about. Link in Discord, general chit chat. Thank you so much indeed. I'll take a look right now. Let me have a look. I don't know how. I mean, CNBC are pretty accurate, right? There's no reason why they should get that wrong, but there's no question about it. According to the information I'm looking at here, they beat on earnings. Simple as that. 40 cents a share expected, and it was 28 cents a share loss. So that's good. Lucid Q4 highlights. EV company beat on EPS, misses on revenue. There we go. Beats on EPS, misses on revenue. Issues production update 2023 guidance. I see. This is an overreaction then. I've got it now. So we're looking at the news right now. I can share it with you exactly what's going on here. So here we go. Let me give it to you right now, and we'll come back to the main earnings in a few moments' time. Let me have a quick look here. We'll just scroll go down here a minute. You can see here. Thank you very much for that. No thanks. I don't need a plan right now. We don't want that. Yeah, okay. See you later. Lucid Motors Q4 earnings highlights. EV company beats on EPS, misses on revenue. Issues production update 2023 guidance. Lucid Group announces fourth quarter revenue of $257 million, which came in shy of a street estimate of $302 million. In the fourth quarter, Lucid produced 3,400, an increase of 53% from the third quarter. That is good. That is very good. Electric company Lucid reported fourth quarter announced. Let's have a look. Fourth quarter financial results after market close. Here are the key highlights. What happened? Lucid Group announced fourth quarter revenue of $257 million, which came in shy of the $302 million. So they're down on revenue. Let's have a look. However, the fourth quarter revenue, $250, which came in shy of it in the fourth quarter, but they beat. Let me carry on reading this. The company reported a loss of 28 cents per share in the fourth quarter, which a street estimate of a loss of 40 cents per share. Hang on. The company reported a loss of 28 cents per share in the fourth quarter, which beat a street estimate of a loss of 40 cents per share. In the fourth quarter, Lucid produced 3,493 vehicles, an increase of 53% from the third quarter. Lucid posted full year revenue of $608 million. The company produced 7,800 vehicles in 22, which came in ahead of the company's adjusted annual production guidance of 6,000 to 7,000 vehicles. The company delivered 4,369 vehicles in 2022. Lucid said it intended the third quarter with $4.9 billion in total liquidity, which it said will fund the company until at least the first quarter of 2024. Okay, that's good. Last year was a challenging year for everyone, yet despite the extraordinary supply chain and logistics challenges, the team preserved with an unrelenting focus on delivering what we believe is the best luxury sedan on the market, Lucid Peter Rawlinson said. Okay, what's next? Lucid said it has over 28,000 reservations as of February 21st, 2023, representing potential sales of $2.7 billion. The reservation total does not include up to 100,000 vehicles reserved by the government of Saudi Arabia. The company announced 2023 production guidance of 10,000 to 14,000 vehicles. So things are improving for Lucid, and the stock price is going up. The stock price is going up. Let's go back to earnings right now, and is that better? Okay. That's better, okay? Much, much better. Sorry about that. I was muted for a second. Okay. I was okay when I was on this screen, right? I was okay over here, wasn't I? Yes, I was. Okay, that's good. You didn't lose me for very long then. Just wanted to make certain you didn't lose me for very long. All right. Okay. If it spikes in the next hour and a half, you can use one of your day trades. Yeah, absolutely. Absolutely. And I will too. I'm here to make money, right? Not to join a fan club. So let's have a look. I'm actually flat right now on my purchase. In fact, I'm down 15 cents. Oh, I'm making money. I'm making money now. Here we go. So let me have a look at it. If I, do you know what? I might set a stop trail loss tomorrow. I don't think I'll day trade it. I think I will, unless it like pops to 10, unless it pops to, I don't know, unless it goes to like $11 or something like that, then I might. But I might hold this now. They're improving. I think I've done all right. I might hold it. I might hold it. I'm glad I'm up. Yeah, that was good. Very, very happy with that. 17 minutes to go. Quick sip of tea. Is everybody well tonight? How many people we got in the show watching us so far? Let's have a look. Smash the like button. If we get 100 likes, we'll give away a cash prize. So smash the like button there. Smash the like button as well if you want the stock to go up. Always good. If we get 100 likes in the show, we'll give away a cash prize. So smash the like. 38 watching, 12 likes. So smash the like button, folks. Let's see if we can get everyone like the video. If we get 100 likes, we'll give away a cash prize for free during the show, live on the show. I will give a share away of Lucid. How about that? For free. I'll give a share of Lucid away for free. If we get 100 likes, we are now at 100. We are now at 15 likes with 36 watching. So there we go. Let's smash the like button. And let's see what we can do tonight. Okay. Not bad at all. Okay. Just 16 minutes to go before the call starts. And we are here with you live every day, up to 10 hours a day in the studio, 12 hours a day actually in the studio. And Lucid is moving up at the moment. Looking good. 16 minutes to go. It's moving up. I think it's an overreaction. I think I'm going to be okay here. So I already sold it. I already made 140% out of Lucid. I've already done that. So this is all free money now. This is all free money. So it's all good. It's all good. It's all good in the hood on Robinhood. Okay, we're up now 0.5% on it. We just bought 51 shares, a small amount. It doesn't have a big enough place on my portfolio right now. Martin, I have a question. Which beat earnings 0.49, which 2022 higher than 21 and raise the dividend? Martin, I have a quick question. Which beat earnings of 0.49, which 2022 higher than 2021 and raise the dividend from 0.10, 0.1 to 0.1. Is that a trivia question, is it, Michael Anthony? Martin, I have a question. Which beat earnings of 0.49, which 2022 higher than 2021, and raise the dividend from point... I have no idea, but I'm sure you're going to tell me. When the inventors Q&A session start, when the investors Q&A session start, the earnings starts in 14 minutes. There's a big clock above my head. On CSX, CSX is now back under $30. The answer was HRZN. CSX raised from 0.1 to 0.1 cent a quarter. CSX, I've got shares in CSX. You have a quick look at it. CSX. Chevron. Hang on a minute. No, that's not Chevron, is it? I beg your pardon. CSX. What is this? No, I don't have shares in that. I was getting confused with something else then. Yeah, I don't have that. Just checked a little bit. Anyway, getting back to our earnings. Twerk, Bic, Sang. Why is the stock down? Because they missed on revenue, but they beat overalls, and the market overreacted. So I'd already made 140%. CSX is a railroad in 23 states. Thank you, Michael Anthony. So basically, I bought the dip, the 10% drop, straight away, and I'm very happy to do so. Let's see what happens. He didn't say per quarter, Eric B. I'm confused what we're talking about now. We've got a bit off topic. Okay. Lucid earnings. Getting ready for Lucid earnings in just a few minutes' time. Come on in. Get ready. Sit down. Should be a good evening. Let's see what happens. I don't really think I'm going to lose any money. I quite like to hold Lucid. They are improving all the time. I don't like the manipulation. Which defense stocks are you holding? Michael Anthony says. I am holding J&J, J&J, Coca-Cola, Amazon. Perhaps not so that defensive with Amazon. VU, 50% of my portfolio is the S&P 500. We are most certainly in a bear market at the moment. And my stocks, and I was up this morning and I was up this afternoon. I won day trade of the day today. So I'm very, very happy with my position. We are all good. 11 minutes to go. Smash the like button, guys. If we get 100 likes on the video, we are now at 19 likes. There's 35 watching. Smash the like. If we get 100 likes, I will pick one of you at random and give you a free stock. I will give you a free stock of Lucid. I will send it to you straight away, live on the show for free, completely for free. All you've got to do is smash the like button, leave a like there. And we've got 19 likes right now, 34 watching. We've got 11 minutes to go. VU is doing you good, Martin. Yes, it is. The S&P 500, I'm a long-term investor. I can take some money off the top, scalp trade when I need to. But ultimately, it's about getting the money in 10 years' time. NVIDIA, I wouldn't buy NVIDIA. It's not really for me. Doesn't really belong in my portfolio. Welcome. If you just tuned in, smash the like button. If we get 100 likes, we'll give away a cash prize. We're now up to 20 likes. There's 34 watching. Okay. Just a few minutes away now from Lucid earnings. Not that long to go now. We're over on TikTok, Twitch, LinkedIn, Facebook. Our home, of course, is here on YouTube. And we just did a small trade of Lucid. No video really next world war will be about chips, says KM Khalifa. That may be the case, but it's not one for me. 10 minutes to go. I think Virgin Orbit can do more to help in that degree with putting satellites in space. Anyway, Lucid, there we are. That's what we're looking at. And we've got just 9 minutes, 45 seconds to go. I think the market overreacted this morning when the earnings was presented. 22 likes now. So we're on the way, 22%. If we get to 100 likes, I will give away a free stock of Lucid for free. Just send it to you directly in the show. Okay, Lucid, just a few minutes to go. Welcome, everybody. Lucid earnings. I can tell you they've beaten expectations overall, missed on revenue, but they beat in total, and their production is going up as well. Do you think Lucid will go up soon after at $10. Well, unfortunately it's a stock that's manipulated by lies and corruption. We've had lots of rumors and stuff, and on this show I spend my time, I'm in the studio 10 hours a day reporting the truth, and unfortunately a lot of the rumors are not true, just to promote the stock. And I took my profits. I knew it was false information. I sold it and made a profit on it. At the end of the day, I'm not a fanboy of any stock. I'm just here to make money consistently. And that's what I do. I'm a long-term investor. However, I will take profits minute by minute if I feel it's the right thing to do. But generally speaking, if I feel that a stock has more value being sold immediately, I will. But anyway, we'll see how it all pans out. We'll see how it all pans out. We just got 8 minutes to go, and I think that's an overreaction. I think we might get a slight rise tomorrow, and I might set a stop trail loss tomorrow. That way I won't even have a day trade. I'll just have a swing trade tomorrow. That suits me. I don't mind owning the stock, but I didn't want to own it at $13. When it popped up 140%, that was ridiculous. That's why I sold it. But I don't mind owning it because it's free money now to me because I made the money before. 7 minutes to go. I'll put your messages on the screen. There's Talk Bayak saying, no sound on TikTok. No sound on TikTok. Thank you very much thank you for telling me. Let me fix that right now. I know why that is. I know why that is. I'm surprised there's people still watching me. Incredible. I know exactly why that is. I will fix it. 1 second. 1 second. 1 second. I know exactly why that is. 1 second. Thank you, Private. I would never have realized. I would have been talking away, wasting my time. So here we go. I'll end the stream and start it again. That way it'll refresh it. Otherwise people thinking, what the hell's going on here? We've still got 6 minutes, so we've got plenty of time. Okay, I'm just starting it again. Private, thank you very much for alerting me to that. Very, very helpful. I know exactly what was wrong. And we're going to put it right now. Okay. 2. There we go. It's now fixed. 1, 2. That should now be fixed. So if I start TikTok again, that should be fixed. Thank you very much indeed for subscribing to my channel. What's for dinner? They will always watch a star. Yeah. But that's very kind of you to say so. But anyway, let's see if it works this time. Okay, 1, 2, 1. 1, 2. There we go. That's working better. Thank you ever so much for alerting me to that, Private. Okay. Do you want to go over there now and tell me? But I think it's working now. CNBS talking about the CEO right now. Well, we're about to get the CEO talking to us live here on our show any second now. We've got 3 minutes to go. Smash the like button. If we get 100 likes during the show, we'll give away a cash prize. Let's see what happens. Private, if you could inform me that it's working over on TikTok, that would be very, very helpful. Okay, we're just 3 minutes to go before the earnings begins. Lucid ended 2022 with 28,000 reservations. Yes, we have that information. Thank you very much for sharing with us. And just 3 minutes to go now before earnings. Let's have a little look. 2 minutes to go. Not that long to go now before earnings begins. Here is the chart. We're watching it. This is the Lucid earnings. I think the market's overreacted. It works. Thank you ever so much, Private. Thank you very much. Thank you so much indeed for telling me that. Would never have realised that. I'd have been talking away for the next hour with no idea of knowing that. Anyway, 2 minutes to go. Let's now start listening in. Here we go. Let me mute that. Take the volume down. Okay, we're listening in to Lucid's conference. Okay, I'm keeping my eye out. Let me just turn the volume down a bit. Just want to monitor it. Okay, 1 minute 39 to go for the Lucid earnings. I can tell you now that I'm just 14 cents out of the money at the moment. It's risen since I bought it. 1 minute to go. If you've just tuned in, please click subscribe, ring the bell. We go live up to 10 hours a day with your breaking news. And would really appreciate that. We're in the studio 12 hours a day, up to 12 hours a day, editing and working to provide you the most honest, real source of information. This is my real money, my real shares. I've got over like $43,000 now invested here, live, all of it on the show. You see everything I've got. Okay, we are about to go. Just a few seconds to go now, so let me clear the timer away. We don't need that anymore. And here we go with the Lucid earnings. Seconds away.
The conference will begin shortly. To raise and lower your hand during Q&A, you can dial *11.
Okay. We're listening in. Normally, no more than a minute late. I don't know why these people are ever late. I'm always I'm not going to say I'm always on time. That's a very dangerous thing to say. However, just seconds away now. Lucid's going up. I'm making money. Yes! Making money. I just bought Job, which paid off all debt, zero debt, with 10 funds bought shares of... Congratulations, Michael Anthony. Very, very good indeed. Congratulations. Very pleased for you. It's a wonderful thing when you make money, innit? Okay, the stock's going up. You can see it going up slightly. I'm now in the money. Yay. There you go. See, I'm making money now. Look. This is all free money now. Just a very small purchase. It doesn't need to be any more than that. So they are 2 minutes late now. Lucid earnings will begin any second. And you will have it any moment now. Here we go.
The conference will begin shortly. To raise and lower your hand during Q&A, you can dial *11.
No, couple more seconds. They're obviously delayed. This is a couple of minutes late now. The stock price is going up. I'm making money. I think it overreacted. I think we're going to get a nice little pop now. I think I can keep it till tomorrow and set a stop trail loss. If you just tuned in, smash the like button. If we get 100 likes, I'll give a share of Lucid away live in the show for free. No, you haven't got to do anything. I will send it straight to you just by smashing the like button. That's all you've got to do. 100 likes and we'll do it. They're now a couple of minutes late. Stick with us. Lucid earnings here. We cover all the earnings. We're up to live 10 hours a day in the studio. Our aim is to be the most honest, trusted YouTube channel on YouTube. It's my own money. Everything is true. I don't exaggerate anything. We don't make any stories up. We don't pump. We don't dump. I just buy with my real money. And I've grown my portfolio from 5,000 and I'm about 43 grand now. All live on the show in front of you. Up to 10 hours a day. Come on, Lucid. You're 3.5 minutes late now. It's not the latest, but that earnings has been. But nevertheless, it's never good. Oh, here we go.
Hello, and thank you for standing by. Welcome to Lucid's fourth quarter 2022 earnings conference call. At this time, all participants are on a listen-only mode. After the speaker's presentation, there will be a question-and-answer session. To ask the question during the session, you will need to press *11 on your telephone. You will then hear an automated message advising your hand is raised. To withdraw your question, please press *11 again. I will now like to hand the conference over to your speaker, Maynard. Sir, you may begin.
Thank you, and welcome to Lucid Group's fourth quarter 2022 earnings call. Joining me today are Peter Rawlinson, our CEO and CTO, and Sherry House, our CFO. Before handing the call over to Peter, let me remind you that some of the statements on this call include forward-looking statements under federal securities laws. These include, without limitation, statements regarding the future financial performance of the company, production and delivery volumes, financial and operating outlook and guidance, macroeconomic and industry trends, company initiatives, and other future events. These statements are based on the predictions and expectations as of today, and actual events or results may differ due to a number of risks and uncertainties. We refer you to the cautionary language and the risk factors in our most recent filings with the SEC and the forward-looking statements on page 2 of our investor deck, available on the investor relations section of our website at ir.lucidmotors.com. In addition, management will make reference to non-GAAP financial measures during this call. A discussion of why we use non-GAAP financial measures and information regarding reconciliation of our GAAP versus non-GAAP results is available in our earnings press release issued earlier this afternoon, as well as in the investor deck. With that, I'd like to turn the call over to Lucid's CEO and CTO, Peter Rawlinson. Peter, please go ahead.
Thank you, Maynard, and thank you everyone for joining us for our fourth quarter earnings call. I'd like to start by extending a heartfelt thank you to the entire Lucid team. I'm proud of their perseverance, resourcefulness, and teamwork. This allowed us to drive meaningful improvements in the back half of 2022 and close out the year with production above our previously stated annual guidance. We went from making 279 vehicles in 2021 to 7,180 in our first full year of production. and we went from delivering 125 vehicles to customers in 2021 to 4,369 deliveries in 2022. Now, I'd also like to thank our suppliers and partners who worked diligently with us to navigate through an exigent year. And of course, I would particularly like to call out the PIF, who have not only been a committed investor, but really an incredible strategic partner. We are most grateful for their partnership. And of course, I'd like to thank our customers. One of the things I enjoy most is getting to meet you and see your delight when you take delivery of your Lucid Air. You are a big part of what drives us to deliver the quality and experience you so deserve. But let's not forget that 2022 was also a seminal year for the company, a year when we finally realized our vision of producing an EV embodying our view of the most advanced technology possible and getting that into customers' hands in significant numbers. That was not without its challenges, but as ever, the team worked tirelessly to resolve, as I will cover later. Now, during that period, I've also observed a growing realization and acknowledgement of our view that our core EV technology is not just the best, but the best by a tangible margin. We see this acceptance widely by many in the know, by those who follow the EV and technology space. In fact, even some of our detractors are coming to this inevitable conclusion that the Lucid Air is a truly incredible product. Now, this awareness has happened, though in the large part not just through an overwhelming endorsement from journalists and outlets in the automotive sector, but moreover through customers experiencing the range, comfort, and sheer driving pleasure of our cars. Now, some of you may have heard my synopsis that there are really 3 steps that will lead to our success as a company. And those steps are manufacturing, sales, and profitability. In short, in respect of our cars, can we make them? Can we sell them? And can we make money on them? So in 2022, our primary focus was the first of these steps, to prove it was indeed possible for us to manufacture cars. We put the right leaders in place, brought logistics in-house, and I personally worked tirelessly on the factory floor, leading the team to identify and remove the manufacturing bottlenecks that we faced. In the fact that I'm taking today's earnings call from our headquarters here in Newark, California, is symbolic of the transition of the day-to-day factory operations to Steve and David and our Arizona team. Let me be clear. Production is no longer a bottleneck. We were also able to deliver Lucid Air Touring and a small number of Lucid Air Pure in the fourth quarter, and delivered our first Airs into Europe and Saudi Arabia as promised. So we now have variants of Air covering a spectrum of performance and range on the road today, and Sapphire, our highest performance Air, is scheduled to start production this summer. You may indeed have seen a video on social media of the Lucid Air Sapphire in a quarter-mile drag race with the Tesla Model S Plaid, the Bugatti Chiron, and a Ducati motorcycle. Lucid Air Sapphire's extraordinary performance is truly a testament to the superiority of the technology we have developed in-house. So whilst other EVs may offer a choice between performance, range, efficiency, charging speed, luxury, and space, variants of Lucid Air lead in all of these key metrics. And this is fundamentally enabled through the vertical integration of our technology. We design, we develop, and manufacture our own motor, inverter, bidirectional charger, and race-derived battery pack in our powertrain factory in Arizona. Now, integral to this is our world-class EV powertrain software. And I want to clarify that a large part of our incredible range and performance is indeed software-derived. And I think that there's insufficient understanding and appreciation of this core Lucid capability. And this is where the importance of our in-house technology leadership is paramount. Not only does it provide advantages in performance, efficiency, charging times, interior space, among many other features. We also expect it will provide a cost advantage at scale. And there are tangible metrics that lead us to believe our technology is probably several years ahead of even our next closest competitor, who, in turn, we believe is several years ahead of others. And we continue to invest in cutting-edge innovation. This is a central capability which I find really exciting and personally really inspiring. A great example is our new motorsports drive unit with integral electric motor, inverter, and transmission, which is already in use as the standard front drive unit for a leading electric racing series. And this embodies Lucid's very latest technology, resulting in unprecedented compactness and lightweight for its power output. Now, I'm also proud to say that Lucid Air achieved the highest possible rating of 5 stars in the rigorous Euro NCAP safety assessment, with a full 5 stars for each category. We brought a clean sheet design and engineering to Lucid Air with the goal of securing the highest possible safety ratings. Also, in the fourth quarter, we released 22 over-the-air software updates, and in particular released UX 2.0, which is our most extensive software update to date, comprising literally tens of millions of new lines of source code across nearly every updatable computer in the vehicle. Lucid Air was engineered from the start with this over-the-air capability and is in every car we make today. And many of the updates and refinements were based on owner feedback and ideas. And our incredible software team is working on further developments and improvements and features, and you'll see these continuously rolled out over time. Our software capabilities are further demonstrated through our recent decision to initiate a voluntary recall of a small number of Lucid Airs related to a supplier issue. Now, I want to be super clear. We were not mandated to do this, but we have an unwavering commitment to our customers. We were able to identify potentially impacted vehicles by sending a software update to all of our vehicles that allowed us to scan for a particular electrical signature within each car, and thereby to identify the less than 300 cars potentially affected by this supplier issue. Now, this truly innovative over-the-air solution is an example of our world-class software capabilities and advanced technologies. Believe me, very few car companies would have been able to implement such a solution. Now, I'd also like to address some questions that we've been getting about battery cell supply. In the fourth quarter, we signed an agreement with Panasonic for battery cells. We expect this agreement, along with our existing agreements with LG and Samsung, to give us sufficient cell supply for our Air and Gravity programs comfortably through 2025. So having manufactured 7,180 vehicles and delivered 4,369 vehicles in 2022, we currently have more than 28,000 reservations. In fact, more than we plan to even make in 2023. And this doesn't include the up to 100,000 vehicles under the agreement with the government of Saudi Arabia, with deliveries expected to start this year. Now, as we indicated last quarter, one part of the variance between production and deliveries is the distribution of vehicles across 3 areas of the delivery process, and that is vehicles in transit, vehicles awaiting pre-delivery inspection, and vehicles awaiting delivery to a customer. Now, some of the vehicles were also internal fleet cars for test drives and engineering. A further constraint is, of course, matching the precise specification of cars we build to that of the customer selection. But like many other companies, we are not immune from a challenging macroeconomic environment. Now, Sherry will go through our guidance in more detail, But I want to reiterate that we are not limited by production. We could scale up, but we're making a conscious decision to match production whilst focusing upon cost-effective build quality. We are focused on building versions of Air to meet customer interest, converting reservations into orders, meeting and increasing customer demand, and getting Lucid Air into the hands of more drivers who can become brand advocates. And I want to stress that this is nothing new to Lucid team. Having designed and engineered Lucid Air through a time of considerable turbulence in the supply chain, we built our greenfield factory in arguably one of the most challenging times the industry has ever seen with the COVID pandemic, later overcoming numerous supply chain and logistics bottlenecks to ramp production. Indeed, we persevered through circumstances outside of our control while growing and becoming a stronger and more nimble company from our experiences. And we'll continue focusing upon innovation and bringing the best products we believe anyone has ever seen to market to delight our customers, but also to make the planet a better place for generations to come in so doing. And we're not only building zero-emission cars, we're building zero-emission cars that make the best use of the world's resources, and that's through our advanced technology and design. It's this mission and our incredible customers that drive us every day. And indeed, that's why I am so optimistic about our future. In 2023, we have two primary strategic areas of focus. Number one, customer awareness and growth. And number two, a laser focus on costs. Sherry will talk more about costs in her prepared remarks. So let me speak now to growth. I spoke about the early momentum we had that was impacted by our ability to manufacture Airs for delivery. We identified the issues and moved quickly to address them. We've gotten past the major bottlenecks limiting manufacturing, but this had some impact on the demand we generated early on, and this has been exacerbated by the challenging macroeconomic environment. But we know there's real interest in our car. We know this because despite not having an aggressive brand awareness campaign, we generated a considerable amount of consumer interest and reservations. And these are customers that discovered Lucid through our accolades. They're the coveted early Dream Edition and Grand Touring customers who love this luxury EV. We've learned so much from our early adopter customers, and they're on the cutting edge of automotive. They're the tastemakers. And now we're ready to expand to a broader audience. Just as I work side by side with the team in Arizona to alleviate the manufacturing bottlenecks, I've been personally touring the country, visiting our studios, listening to our sales associates, delivering cars in person, and speaking to customers to garner all their insightful feedback. And I've taken this feedback to energize the team with a renewed focus upon building broader and more targeted brand awareness. This effort reaches across our organization, from leadership to the retail customer experience, and furthers the progress we've already seen with national ride and drive programs. Indeed, we're inviting people to experience the best, and those who best understand this are our customers, who ultimately become our very best advocates. And there's also a critical mass we're nearing. In my experience, there's a tipping point in brand visibility once enough vehicles are on the road. And I believe we're getting really closer to that point now. I'm proud to say that today, indeed, we believe there's a Lucid Air in every single state of the USA. And turning to our product roadmap, we have Stealth Look coming, Metal Roof Touring, more pure all-wheel drive, and pure rear-wheel drive, the purest of the pures. We have a lot of latent demand for these products. However, I should note we are experiencing a supply chain issue with Stealth Look that will impact our ability to ship these in Q1 of this year. And we have quite a bit of demand here, and we're working very hard to resolve this. We'll also be ramping up international shipments this year, of course, to Europe and to the Middle East. And I'm really excited about the Gravity SUV, which remains on track for start of production in 2024. Gravity builds upon everything we've achieved thus far, driving further advancements of our in-house technology to create a luxury SUV like none other. Gravity is a further evolution of Lucid's core DNA of luxury, spaciousness, and efficiency through its in-house technology, setting itself apart from the competition with a previously unattainable combination of supercar performance and seating for up to 7 adults. I look forward to Gravity's public unveiling later this year. So, I want to leave you with a message of restless optimism for the year ahead. We have what we view as the very best car imaginable in production today, a view substantiated with countless reviews and accolades. Plus, we have more attainable versions arriving very soon. We now need to amplify this message across a broader customer audience in order to broaden awareness, which will in turn drive sales. We'll be ramping up in key new international markets. We'll be producing with quality and volume. Truly landmark products are on their way in Sapphire and Gravity, supported by a technology roadmap to keep us clearly ahead of the competition. I consider myself privileged to lead our talented team through this, the next step of our journey. And with that, let me turn it over to Sherry for an update on our financials. Sherry.
Thank you, Peter, and thank you to those who are taking the time to join us today. In 2022, we scaled virtually every part of our business while keeping a sharp focus on execution. We made tremendous strides in our production ramp, began delivering Grand Touring, Air Touring, and Pure in the U.S., and initiated deliveries into Canada, Europe, and the Middle East. We also launched Lucid Financial Services to provide loan and lease products to our customer base and had our most significant over-the-air software upgrade in UX 2.0, just to name a few of our many achievements. We were able to accomplish this despite supplier, supply chain, logistics, and quality issues throughout parts of the year, and we finished the year on a strong production note, coming in above our previous annual production guidance. All of this was achieved through the perseverance and collaboration of the entire Lucid team. I'd like to extend my sincere gratitude to them and to our customers, our partners, and our suppliers, without whom this would not have been possible. Now, turning to our fourth quarter in 2022 financial results. For 2022, we recorded revenue of just over $608 million, up from just over $27 million in 2021, and achieved an adjusted EBITDA loss of $1.97 billion versus a loss of $952 million in 2021. In 2022, we made important investments in our future and did so while ensuring a healthy balance sheet throughout the year with an average liquidity balance of over $4.8 billion. Now, moving to the fourth quarter results. We produced 3,493 vehicles, delivered 1,932, and generated revenue of $257.7 million. Cost of revenue was $615.3 million for the fourth quarter. As we produce vehicles at low volumes on production lines designed for higher volumes, we have and we will continue to experience negative gross profit related to labor and overhead costs. However, as we scale production, we would expect to see economy of scale benefits. Additionally, we recorded a lower of cost or net realizable value, which we also refer to as LCNRV, adjustment of $204.9 million in Q4. This amount contemplates the value we anticipate receiving upon vehicle sale after considering costs necessary to convert the inventory on hand into a finished product. Our LCNRV impairment increased 10% on an absolute basis, primarily due to the production of multiple variants of Air and an increase in inventory levels associated with the ramp in production. We typically receive several questions from the investment community on LCNRV and how to normalize this impact. The impairment calculation has various levels of complexity, And so understandably, it's very difficult to back out when assessing gross margin. What I would say is we have seen improvements in gross margin throughout the year. When adjusting for the LCNRV, we went from an average gross margin of negative 138% in Q1 and Q2 to an average negative 58% in Q3, Q4, for a total gross margin improvement of 2.3x over that period. And we're far from done. We have many additional opportunities identified that I'll illustrate in a moment. Moving to operating expenses. We've been able to hold operating expenses essentially flat while increasing the revenue line 32% quarter over quarter. R&D expense totaled approximately $221.3 million, up 4% sequentially. The sequential increase was primarily related to Gravity and payroll expenses, partially offset by lower stock-based compensation expense. SG&A expense was approximately $170.9 million, down 3% sequentially. The sequential decrease was primarily due to lower stock-based compensation expense and reduction of specific external professional services. Stock-based compensation in the quarter was $71.3 million. Approximately $11.9 million was in cost of revenue, $28.5 million in research and development, and $30.9 million was in SG&A. In other income, we recognized a non-cash gain of $256 million related to a change in fair value of a common stock warrant liability. I'd like to highlight, though, that this non-cash warrant-related impact can be influenced quarter to quarter by a number of factors, but one of the larger factors is Lucid Group's share price at the end of the quarter. The decrease in our share price was one of the key reasons for the non-cash gain. The inverse should also hold true, so that's something to consider as some of you build forecasts at the end of each quarter. In Q4, we achieved an adjusted EBITDA loss of $623.6 million. Moving to the balance sheet. We ended the quarter with just over $4.4 billion in cash equivalents, and investments, with total liquidity of approximately $4.9 billion when considering our global credit facilities. This included the successful completion of a $1.5 billion capital raise in Q4, which was comprised of an at-the-market offering for net proceeds of $594.3 million, and also the consummation of a private placement of shares to the PIF for aggregate proceeds of $915 million. The Public Investment Fund of Saudi Arabia has been a committed investor and a strategic partner for Lucid for many years, and we're so grateful for their partnership and support. Since 2018, the PIF has invested $3.6 billion, including $915 million through its private placement in Q4 2022 through IAIR, an affiliate of the PIF. They've also been instrumental in introducing us to many of the ministries throughout Saudi Arabia, and those relationships and partnerships have resulted in significant economic and administrative support as we launch our international operations in the Middle East. Back to the balance sheet. We're very proud of the balance sheet strength that we've been able to consistently sustain over time. As you've seen over the last 15 months, we have accessed a variety of funding options, from the $2 billion green convertible bond offering at the end of 2021 to the $1.5 billion at the market in private placement at the end of 2022, coupled with government support in Saudi Arabia in the large $1 billion ABL facility we put in place with a world-class banking syndicate. We'll continue to take a holistic and opportunistic approach towards funding business. We believe we have access to a variety of available options in debt and equity markets, as well as access to low-cost government programs. Turning to inventory. Inventory increased 22% in the quarter due to our production volume ramp and the number of vehicle variants that we are now producing. Capital expenditures were $289.9 million in Q4. Year-to-date CapEx was approximately $1.1 billion, slightly lower than our guidance of $1.2 billion, which is due to timing of payments and the deferment of certain costs by reconfiguring usage of phase one at AMP1 in Arizona in order to use it for a longer period of time before we fully cut over to phase 2 in Arizona. Before providing our 2023 outlook, I want to speak to our top 2 priorities as a company. Heading into 2023, we recognize the difficult market environment and particularly the impact higher interest rates and market uncertainty has on consumers' inclination to purchase, and we're taking action. We talked about our 2 strategic priorities in 2023 being number 1, growth, and number 2, cost. Peter spoke to our growth priority, so I'll largely address cost. But before doing so, I'd like to make one comment on our growth. Beyond our focus on vehicle growth, I believe we have a number of additional opportunities, many of which are already beginning to become additive to 2023. Our strong technology advantage is no longer in question. Our range, our performance, our efficiency, our charge times, we're increasingly being recognized for our in-house technology. And these are creating opportunities. We generated revenue from our motorsports electric drive unit in Q4. We expect to recognize a small amount of revenue from a U.S. government award for battery module prototypes, and a number of others have reached out to us for discussion on licensing or purchasing our technology. In addition, we signed our first vehicle emission credit deal in the U.S. It's a multi-year deal, and we expect to recognize a small amount of revenue starting in 2023. And we see considerably more opportunity here as the regulatory environment around many parts of the world tightens. Turning to cost, there are 2 areas of cost that we are zeroing in on. The first is driving down the cost per vehicle. The second is cost optimization of operating expenses. And let me go through each. On the manufacturing and cost of goods sold side, we've been intensely focused on reducing costs. We have daily cost improvement meetings across various areas of manufacturing, engineering, and supply chain. Last year, we were able to reduce costs to more than cover the headwinds in the form of battery raw material input costs. As we are sitting here in February, we already have identified cost opportunities at a similar level to last year that we expect to implement by the end of this year. And we are surfacing more innovative ideas in cross-functional internal meetings and value engineering workshops with our supply base. This is before considering the impact of the Inflation Reduction Act, which we expect could contribute as much as a couple $1,000s per vehicle. As we look ahead to Gravity, we've already sourced approximately 70% of Gravity components with a very strong carryover of suppliers from Air. And I'm happy to report that on an aggregate basis to date, we've been able to stay in alignment with our cost targets for Gravity. Another area of COGS focus for this year is inbound freight. We've achieved significant reductions last year by moving our international freight from air transit to sea, but we've identified another 2 to 3x savings that we believe is possible. We have a task team assigned, and we think this is one of the fastest realizable cost reduction opportunities available to us this year. On the operating expense side, we're instilling the same approach. We're looking at all facets of spending with a multitude of ideas on the table. In SG&A, we do expect growth in a couple of key areas. Number 1, we'll continue to strategically build out our service and delivery footprint throughout the U.S., Europe, and the Middle East as we meet the needs of our growing customer base and our commitment to customer care. However, we're simultaneously studying ways to drive increased efficiencies out of our existing assets, and we're feeding this information into our future planning. And second, we're increasing our investment in IT enterprise systems to support the increasing production and delivery volume, global expansion, continuous improvement in cybersecurity, and growth in cloud data resources for both our active customer fleet and our internal R&D initiatives. We are instilling a culture of cost consciousness, and we're working across the company to identify and execute on numerous cost efficiency opportunities. Now to our outlook. For 2023, while we believe we have capacity for greater production, we're forecasting a production range of 10,000 to 14,000 vehicles. Given the uncertain macro environment, we think it's prudent to provide a guidance range that's larger than what we would provide under normal circumstances. While we don't provide quarterly guidance, I want to highlight some things to consider as you think about the linearity throughout the year. In Q1, factory production in the early part of January was reduced by 7 days of production due to a planned year-end physical inventory count. We'll also start building vehicles for Europe and the Middle East in earnest shortly, and so there will be some transit time associated with that. In addition, due to supply chain challenges, we were unable to deliver on the popular Stealth Look option, resulting in a reduction of buildable configurations heading into Q1. And so we made a strategic decision to moderate some production as we transition to buildable configurations. Thus, we expect Q1 to be down significantly on a sequential basis with a corresponding impact on margins in Q1. In Q2, we will ramp shipments to the Middle East and Europe, so we would expect total deliveries to increase in Q2. We will also begin to build popular configurations across several vehicle variants, including Pure, in higher volumes for which demand remains very strong. Starting in Q3, we may begin activating parts of Phase 2 at AMP1, and we expect some transitional downtime could occur. In Q4, with Phase 2, we would expect higher efficiencies as specific shops come online and hence greater potential manufacturing output versus the rest of the year. While I would caution that there are many controllable and uncontrollable variables that can affect gross margin, I wanted to provide some color on the direction of our gross margin. We expect lower volumes in Q1 to impact gross margin, but expect sequential improvement throughout the year, which should be supported by some of the expected bill of material cost downs and inbound freight opportunities that I just mentioned a moment ago. Regarding our liquidity position, we ended the quarter with approximately $4.9 billion in total liquidity, which we believe provides sufficient capital at least into the first quarter of 2024. Moving to CapEx, we expect capital expenditures for 2023 to be between $1.5 and $1.75 billion, reflecting some efficiencies and deferrals in our capital outlay, which is lower than the $2 billion annual CapEx that we provided at the beginning of 2022. We are moving forward with parts of Phase 2 in Arizona, as we believe will benefit from a number of cost efficiencies, including bringing logistics more fully on site, bringing staffing in-house, as well as plant efficiencies. We also are looking at activating Phase 2 online in stages on a shop-by-shop basis, which we expect will allow us to defer some capital expenditures until 2024 without a delay in the estimated Gravity timing. Lastly, as Peter mentioned, we had more than 28,000 reservations as of February 21st, and this is before counting the potential impact of the up to 100,000 vehicles from KSA. At the time we first started providing reservations, we had not started production or deliveries, and we provided this figure as a proxy to estimate potential future revenue. With the progression of our business, we believe production and deliveries are a better representation of the progress of our business. And so, going forward, we will no longer plan to provide an updated quarterly reservation number. However, we plan to continue to provide quarterly production and delivery figures shortly following the end of each quarter. As we look into 2023, we'll continue to focus on strong capital discipline, leaving no stone unturned for every cost optimization or elimination opportunity. We are proud of our technology and product achievements. We're gearing for growth while simultaneously taking a vigorous and comprehensive look at reducing costs, and I am very excited about the opportunities that lie ahead of us. With that, let me turn it back to Maynard to get your questions. Maynard.
Thanks, Sherry. We'll now start the Q&A portion of the call. Before we take questions from those on the phone, I do want to take a question from our retail investors.
Bear with us. I'm sure we'll get the sound back.
Platform. The first question is the Saudi PIF taking Lucid private?
As a policy, Lucid does not comment on market rumors, and so we don't have anything to say specific to this question. What we said in our prepared remarks is that PIF has shown a commitment to Lucid, having provided $3.6 billion since 2018, including $915 million through its participation from the subscription agreement just in Q4 2022. PIF has not only been a committed investor, but also a strong strategic partner, and we're very grateful for their partnership.
Hear, hear. Their partnership and support has been phenomenal.
Great. Tawanda, actually, I think we'll move to the questions from the phone lines, please.
Thank you. Ladies and gentlemen, as a reminder to ask the question, please press star 11 on your telephone and wait for your name to be announced. To withdraw your question, please press star 11 again. We ask that you limit yourself to one question and one follow-up. Please stand by while we compile the Q&A roster.
Okay, if you just joined us, please.
Our first question comes from the line of John Murphy with Bank of America. Your line is open.
Good evening, everybody. I just wanted to dig into sort of the decline in the reservations and sort of this new line that demand may be a little bit weaker than expected. I mean, and Peter, when you look at this, the implied price on the old backlog was $94,000, and then on the current backlog it's $96,000. So it kind of indicates that the mix improved. So it seems like these folks might be a bit stickier, but you're indicating that the demand relative to your production is weakening, but it's still far in excess of what you're talking about producing this year of 10 to 14,000 units. So I'm just trying to understand why, if production is not an issue, why you wouldn't produce more to drive revenue and profits this year if that backlog is real.
Yeah, yes, Peter here. John, that's a very cogent point. First of all, we do have over 28,000 reservations, but remember that a reservation doesn't guarantee itself is translating into a delivery. These are non-binding reservations. So you can't bank on a reservation automatically transitioning into a delivery. I'd also like to point out that the 28,000 does not include the 100,000 that are potentially being ordered by the government of Saudi Arabia. So we're sitting in a very good position in that respect. I think what we've got to focus on is providing cars, building configurations from the factory that precisely match the configuration of the customer order. For example, we've got Stealth trim coming. We've got a little delay in Stealth trim because of a supplier issue, and there's a lot of orders for Stealth. And then there's Pure in volume, although we've delivered some Pures, and many of those reservations are waiting for the availability of the purest version of Pure, the rear-wheel drive. So I think a lot of this is, our focus on providing new variants, our focus on building cars with the utmost attention to quality and cost in terms of optimizing our processes, and matching the cars that we do build to the precise reservation, the precise specification of the customer, whilst being mindful that a reservation in itself is non-binding and not guaranteed to transition to the consummation of an order.
Additionally, we're in the process of expanding internationally, and that takes time. We'll also be putting some vehicles on boats and starting to really bring more volume to the Middle East and the Europe, especially as we're exiting Q1 and into Q2. So you're going to start to see that pick up throughout the year in volume.
And also, John, our advice, our guidance for the year is a reflection of the range due to the uncertainty of the current macroeconomic conditions. And, the effect on consumer behavior is challenging in such circumstances.
Okay, and then if I could just ask one quick follow-up. You're emphasizing your technology and the advantages you have which is, it's pretty impressive. What kind of opportunities in the near term as far as licensing and potential product sales on the powertrain side do you think could effectively be executed, or is this the kind of opportunity that might be 2 to 5 years out as opposed to something that'd be 1 to 2 years out?
Well, John, I'd love to do this. I think we've got a technology which is, which I've observed a sea change in the last year. There's a widespread recognition that the technology that I believe is the best is being recognized as so very widely. Yet we'd like to make our technology available to other automakers and customers, and not just automakers. There are a range of applications. Our focus has been, as an executive team, focus on ramping up production. My focus right now is just amplifying the message to a broader audience so that we can ramp up our sales. It's not been, my focus has not been going out to lobby for licensing agreements with our technology to other automakers. We've been very passive in that respect. And I think that's the right focus for us. Let's focus on our own product first and foremost, and then good things will come.
And then in addition, I think that any test that, we continue to apply in those cases is it accretive to our business? Can it leverage where we are today as a business? And is it going to not distract from our core focus as a company? So when it meets those, then it becomes a higher likelihood of success.
Okay. Thank you very much, guys.
Thank you. Please stand by for our next question. Our next question comes from the line of James Picariello with BNP Paribas. Your line is open.
Hey, hi, guys. Just to ask John's first question, just another way or more bluntly, the 10 to 14,000 production guide, that's a deeper reflection of underlying demand as opposed to any limitations on your ability to ramp production, right? Because production is no longer the bottleneck. If you were to annualize your fourth quarter production, right, that would get you to 14,000 units for the full year. So yeah, can you just kind of unpack that one more time in terms of, what informs this range? Is it demand or is it, yeah?
Certainly, and your math is irrefutable. Look, we've solved production. That is not the gating issue here now. My focus is on sales. And here's the thing. We've got what I believe and to be the very best product in the world. And with just too few people are aware of not just the car, but even the company. And so we need to this is my focus now, away from production, to amplifying customer awareness that we've got this amazing car with unprecedented range, technology, efficiency, incredible driving machine, a great driver's car, unbridled joy of ownership that we're getting feedback from owners who've experienced this. We need to amplify that message and broaden the awareness, which in turn will drive sales. And that is the focus right now. It's not that we're production constrained.
Yeah. And then in addition, reservation holders, some of them are waiting for us to offer their very specific configurations in volume. We talked about that already, whether it be Pure, whether it be Stealth, whether it be some of the Middle East and European configurations as well.
Yeah, there's quite a lot of interest in Stealth, and unfortunately we've got a little bit of a delay due to supply chain challenges, which we're working assiduously to resolve.
Okay, understood. And on gross profit for this year, and it does sound as though the LCNRV formula is quite complicated, but that totaled almost $570 million in negative non-cash impact for 2022. Is there any way to think about what that impact will look like for this year, and any clarity on if this year goes to plan, your plan as stated here, when gross profit break even, the time horizon as to when that could be achieved, I think would be obviously would be really helpful.
Sure. So as I said on the prepared remarks, we're really proud of the actions that we were able to take last year in terms of cost reduction, cost down, inbound freight reductions. It led to a 2.3x improvement when you went from the first half of last year to the second half of last year when removing the effects of the LCNRV. As we look forward to next year, the way that we're thinking about it is we have identified areas for bill of material cost reductions. We have identified areas for inbound freight reductions. We do see emission credits starting to come more into play. We do expect to start getting the benefits of IRA impacts. We do also see some lessening of our need to be buying ahead significantly in the spot market. Last year, this time, we were buying ahead a lot of semiconductors. We're not doing that nearly as much as we were last year this time. All of those are potential tailwinds and benefits to gross margin. On the other side, some of the things that you'll see is that as the trim mix changes and it moves to more pure, those are lower margins. So that's kind of working against you from a gross margin profitability perspective. Also, just looking ahead, as we start to activate some of the additional equipment in the factory, that's going to be a little bit more of a burden in terms of depreciation, which is also going to act in the opposite direction. So what I wanted to do now is to just at least help contextualize a little bit of where the puts and the takes are. We're not here going to share exactly when we think we're going to be gross margin positive, but I think that those are important factors to take into consideration as you're thinking about your models.
Thanks.
Thank you. Please stand by for our next question. Our next question comes from the line of Andres Shepherd with Cantor Fitzgerald. Your line is open.
Hi, good afternoon. Thanks for taking my question and congrats on the quarter. I just wanted to touch on the guidance once more. So that 10 to 14,000 number, which is roughly in line with the preliminary guidance for last year. Can you talk about some of the kind of the assumptions that are embedded in that guidance and just maybe a little more granularity? I presume that's, you said before that you will begin shipments to Europe and Middle East later this year. So I presume that part of that production is being included in there. I'm just wondering if you can maybe add a little more context there. Thank you.
It is, absolutely. We're including, in the guidance, a number of cars to Europe and the Middle East. We've already supplied small numbers to those markets, but we're really ramping up now in earnest in the very near quarter. We've also, it includes the ramp up in customer demand for Pure, for metal roof, touring, for rear wheel drive Pure, and a number of factors. As an executive team, we've taken a very careful look at the landscape, and we've been very cognizant in our thinking, our guidance, a prudent guidance with a bandwidth, which reflects the uncertainty of the market in these challenging macroeconomic times.
Got it. Thanks, Peter. And maybe one quick follow-up. I wanted to touch on licensing again. I think some perception out there is that over the long term, this licensing component could potentially be the largest contributor to revenue in the future. And, maybe I'm not thinking about this correctly, but I presume that would certainly improve gross margins. I understand the emphasis being almost entirely on ramping up production and car sales, but why not introduce this licensing revenue segment, perhaps prior than initially anticipated? Thanks.
Indeed, I actually share your optimism. I think that it's a really beguiling opportunity here, but I have to have laser focus. I've described the three steps forward. Can we make these cars? Can we sell them? And can we make a margin on them? Last year, my focus was on manufacturing. Can we make them? My focus now is on amplifying the message, attracting a broader audience, and
We apologize for the audio. It's coming from their end.
On ramping
Please
up
bear
our
with
sales.
us.
But you're absolutely right. I mean, this is a technology race, and this is very little understood. The reason we've got outstanding range, with the reason we've got so much more range than the competition, it's not born due to an oversized battery pack. It's born upon extraordinary efficiency, which we've created through in-house technology. That means we can go further with a smaller battery pack. That means our car can be lighter and more agile and more cost-effective to make. And, this is where we have a leadership. And this is so relevant to many other car companies that haven't really invested in this new era of electric technology, but it's also got applications outside of automotive in heavy industry, aerospace, and agriculture.
And as you may have heard me say on prior earnings calls as well, this just doesn't have, application just for like the passenger cars, like Peter's saying, but also opportunities for fleet operators. They, more than anybody, appreciate the efficiency, the performance, the range that we have. Uptime is important to them. Range is important to them. So those are factors that we think also make this a very attractive option for fleets as well.
I do also think, though, that there is a natural time scale to this. I think that many traditional automakers have only just come to terms with the fact that battery electric is indeed the future. And I think that amongst those, many are yet to recognize the value of high technology solutions, not commoditizing EV technology, and the true value of efficiency. Mark my words, the efficiency is not some esoteric thing that appeals just to engineers and scientists. It has a tangible value to the commercial viability of a company, because the battery pack is the biggest single big ticket item in the bill of materials of the car. And if you can meaningfully reduce the size of the battery for a given range through efficiency, that means that you can make a more profitable product. And I think that many people are actually really wakening up to this and this realization.
Wonderful. Okay, thanks, Peter. Thanks, Sherry. Congrats on the quarter. I'll pass it on. Thank you.
Thank you.
Thank you very much.
Thank you. Please stand by for our next question. Our next question comes from the line of Ron Jewsikow with Guggenheim Partners. Your line is open.
Peter, Sherry, good evening, and thanks for taking my questions. First on reservations, are you seeing higher cancellation rates on maybe your higher trim vehicles, or what drove the recent decision to add an incentive on select trim levels?
Well, remember that when we have a reservation, it is a non-binding reservation. So there's no guarantee that someone who's made a reservation will actually follow through with that. What we are seeing is a very strong demand, particularly for our products that are forthcoming, pure rear-wheel drive, pure touring. I think that we've had a very strong uptake of Green Edition and Grand Touring, but I think there is a latent demand for other products in the range, and particularly Stealth. I think there's a strong demand for Stealth, and that's why I'm frustrated that we have some supply chain issues now, which are delaying that a little bit, but it's coming very soon.
Okay, that's helpful. And then presentation calls out strong demand for Air Pure, and I think that makes perfect sense, especially when we look at the implied potential sales in the reservation backlog. But is that the single biggest gating factor for 2023 production, or maybe are we underappreciating some of the Stealth and international batching being pretty large issues? Yeah. I guess the way we think about it is Pure is ramping pretty meaningfully.
Yeah, it's an overlay of another. It's more nuanced than that. I mean, it's just the different specifications of cars: interior, color, exterior, between the range of touring, grand touring, and pure, and then you've got the wheel combinations, and then you overlay that with the stealth. There's quite a number of combinations here, and it's matching, the discrete requirements, the very discerning requirements, a very discerning high-end customer base, with our ability to build specifically those specs of cars and get those to the customers. That is one factor. And then we have the overlay of the international deliveries and the fact then that you've got relatively long journeys to faraway places between the factory and actually the customer. So all these factors conspire to, and we give a very analytical approach. Sherry has led a very thorough analysis from the executive team, looking at a whole range of factors to lead to these conclusions.
Thanks.
Yeah, we take a full cross-functional look at that across every single area, from supply chain to manufacturing to all of those. And as we said, that manufacturing is very well prepared to be able to take on additional volumes as they come forward.
Production is no longer a bottleneck here. But I would say that one of the biggest factors we face, and I'll be very transparent here, is I believe, from my perspective, we've got the very best car in the world, and not enough people know about it. And actually, that is an entirely solvable problem, I believe.
Yeah, appreciate that. And thanks, Peter, and thanks, Sherry.
Thank you.
Thank you.
You're welcome.
Please stand by for our next question. Our next question comes from the line of Chris McNally with Evercore. Your line is open.
Thanks so much, team, for taking the question. Two quick ones. One on Pure, and then one just qualitatively on gross margin. So Peter, on Pure, you mentioned that more units and more volume will be available in early 2024, and just to combine the sort of demand, wait time, and reservations comments you've already answered to some of the other questions. Why couldn't you produce more Pure this year that would pull in higher conversion from the reservations and just do it this year as opposed to 24? That was the part that wasn't clear.
We don't have to wait till 2024. What we've said is that Gravity will start production in 24. We're absolutely indeed doing that, Chris. We're ramping up Pure and rear-wheel drive Pure throughout this year. It's what we need to do is ramp up the supplier's ability to supply the parts for those particular models.
Okay, so while production is not a bottleneck, there is maybe component supply issues that has a natural ramp curve for Pure. So you are somewhat limited on the amount that you can produce of Pure this year, even though it's not a quote-unquote bottleneck.
That's right. And we're further ahead with four-wheel drive Pure than two-wheel drive Pure. And actually, two-wheel drive Pure is a great car as well because it's a classic rear-wheel drive car, great driver's machine.
Okay. Hey, Peter, would you, just because, there's always a question that will result of this, of, chicken and egg of demand versus production. Would you be willing to venture, on a go-forward basis? Do you think Pure will be, sort of greater than 50% of the, of sort of the demand for Air if we put Gravity aside?
I would think that's a reasonable assumption, yes. I think that we're looking for just its price point will determine that figure, that presumption would be reasonable, yes.
Yeah.
I can't guide precisely on the product mix, but I would think you're not far off.
Yeah, I would think that over time that's what you would see. You're going to have some different impacts here in the near term because some of the regions like the Middle East and Europe haven't had the opportunity to enjoy some of the higher products yet.
Yeah.
So there's going to be, maybe a little bit more focus on those earlier, and then they would get Pure a little bit later.
Indeed, that's why we're going to be building Dreams
right.
and Grand Tourings now very soon for Europe and the Middle East. in numbers as we ramp up that. So there will be a skew towards higher end products, but I think that will be transient in those markets.
Okay, great. And then Sherry, just one more for you. I know you don't want to give gross margin targets or guidance, but is it fair to assume you talked about the cost improvements from sort of the 58% sort of quote unquote normalized in second half? You'll make some improvements over the course of 2023, but you really won't get the unit scale under absorption just given the numbers versus where sort of second half and Q4 are. Is it fair to assume that is probably by far the absolute largest bucket to get you to gross margin positive, and that when I think about a high utilization number, you probably have to get production into the 30 plus units to sort of have high utilization on just phase one? Again, no numbers, but conceptually.
Yeah, I think conceptually you're thinking about the right way. I think that we're seeing really good reductions in bill of material costs and as I said, in some of the other areas where I think we have some control, including inbound freight. But that, remember, is going to take through the year to start to see. So it's going to be gradual over time. And then when you look at volumes probably increasing over that period, we guided that Q1 will be low, and the fact that you've got some depreciation that's going to start activating as we bring on some of those additional shops towards the end of the year. That's going to increase the depreciation, and the volume's not going to catch up entirely to that, right? So you've got some competing forces there, but I think you've got a pretty good understanding of it as you just described it.
Okay. Much appreciated.
Thank you. Ladies and gentlemen, this concludes our Q&A session. I would now like to turn the call back to Maynard for closing remarks.
Thanks, everyone. This concludes Lucid's fourth quarter 2022 earnings conference call. Thank you all for joining us today, and you may now disconnect.
Okay, I thought we were going to get some closing remarks there, but we didn't. That was a bit strange. We wasn't expecting to get some closing remarks. Are we not going to get that? Very peculiar. We always get closing remarks from Lucid or any earnings, but doesn't look like it. It looks like the caller, perhaps the moderator, made a mistake there. We always get it doesn't look like it. The call was ended. Okay, fair enough. Very peculiar indeed. But however, never mind. All right, let's go back to Lucid now and a quick discussion, just briefly. For those of you tuned in tonight, I want to thank you very much for being here. If it's your very first time, my name is Martyn Lucas. We go live up to 10 hours every day. Our aim is to be the most honest, real trading, investing platform on YouTube. This is my real money, my real shares. I can share with you my real positions, my real money every day in front of you. I started at $5,000. We are now at $43,000 live on the show. And thank you very much indeed. We are back again in the morning for our opening bell. We'll be here all day tomorrow. Breaking news throughout the day. Thank you ever so much, everyone, for taking part tonight. Let me just go over to Lucid chart a minute and see where we are. I expect actually tomorrow perhaps to see the stock rise somewhat. I bought back in. I already made 140% on it before, but I closed my position after that rumor of the PIF. But as they said, they didn't want to comment on it, of the company going private, being bought out. But we shall see what happens in the coming months. But however, it's not a major problem if that happens. So I'm not concerned. I took my profit. I made some profit from it. I'm buying back in again now. I think the market's overreacted tonight. I think seeing a near 10% drop when it was at its bottom was an overreaction. That presented me with a perfect opportunity to buy in. Anyway, that's it from me. I look forward to seeing you all back in the morning for the opening bell. Just got some comments coming in here. Lucid is a good stock to trade, but it's a risky investment, says Moonshot. I think so. But at this price, I think it's okay. Buy the rumor, sell the news. Yeah, classic from Previc. Just come in there. Absolutely right. I will see you all back in the morning. Thank you very much for tuning in. And I look forward to seeing you all back for the opening bell. And till then, take care of yourselves and each other.